While you were sleeping, the largest financial transfer in modern history occurred. $2 trillion in silver, gone. Not stolen in the dark, not hidden away and taken in broad daylight. While American investors chase paper contracts and digital promises, China now controls the physical metal. America holds receipts. And what comes next will redefine how wealth works in this country. Before we go further, if you want to understand what the government and mainstream media are not telling you about money, power, and who really controls your financial future, hit that subscribe button right now. This channel exists because people like you refuse to stay blind. Here's what happened. China has been buying physical silver at a scale no one in Washington wanted to admit. Not through exchanges, not through American brokers. They went directly to the mines, directly to refineries, directly to the source. They signed long-term contracts with producers in Mexico, Peru, Bolivia, and Australia. They locked in supply before it ever reached the open market. They paid cash. They paid premiums. They moved fast. American investors, meanwhile, kept buying paper, ETFs, futures contracts, certificates that promise you own silver but never let you touch it. Wall Street told you it was the same thing. It was not. When you buy paper, you own a claim. When China buys metal, they own the asset. There's a difference, a huge one, and that difference is about to hit millions of Americans who thought they were protected. The numbers are staggering. In the past 3 years, China imported more silver than the entire United States government holds in reserve. They did not announce it. They did not brag. They just moved. Shipments went to state-controlled vaults, manufacturing plants, technology centers. The metal disappeared into their system. It is not coming back. This matters because silver is not just a shiny metal that people collect. It is essential. Solar panels need it. Electric vehicles need it. Semiconductors need it. Defense systems need it. Medical equipment needs it. You cannot build the future without it. And China knows this. They are not buying silver to make jewelry. They are buying leverage. Now look at what most people are missing. The United States does not mine enough silver to meet its own needs. America relies on imports. We depend on global supply chains. We trust that metal will always be available when we need it. That trust is about to be tested. Because when China controls the physical supply, they control the price. They control who gets access. They control the terms. Here is where it gets worse. American silver reserves are a fraction of what they used to be. Decades ago, the government held billions of ounces. Strategic stockpiles are meant to protect the nation in times of crisis. Those stockpiles were sold off, liquidated, turned into cash to fund programs and pay debts. The metal is gone. What remains would not last 6 months if supply chains broke down. Meanwhile, the paper market keeps growing. More contracts, more claims, more promises. But the physical metal backing those contracts has not grown. It has shrunk. There is now far more paper silver than actual silver. When the gap becomes obvious, when people demand delivery and there's nothing to deliver, the system breaks. Prices do not just go up, they explode. And those holding paper find out their claims are worthless. China saw this coming. They positioned themselves while America was distracted. While politicians argued over spending bills and culture wars, a global power shift happened in the commodities market. Silver was always strategic. Now it is a weapon. Think about how America used to operate. We controlled resources, we set terms, we built systems where the dollar was king and physical assets flowed to us. That world is disappearing. Other nations stopped playing by our rules. They stopped trusting our currency. They started taking real things, gold, silver, rare earth metals, food supplies, energy resources. They are building a new system, and in that system, paper promises mean nothing. The consequences are just beginning. When American manufacturers need silver and cannot get it, production slows. When defense contractors face shortages, national security suffers. When investors realize their ETFs cannot deliver physical metal, panic spreads. The price of everything connected to silver rises, and every day, Americans pay more without understanding why. This is not a theory. This is happening now. The transfer is complete. The metal is gone. What comes next depends on whether Americans wake up to what just occurred. The mechanics of what China did are more calculated than most people realize. This was not an impulsive buying spree. This was a decade-long strategy executed with precision while American financial institutions convinced their clients that paper was just as good as the real thing. It was not. And the proof is sitting in Chinese vaults right now. Here's how they pulled it off. China used state-owned enterprises to make the purchases. These are not private companies answering to shareholders. These are extensions of the Chinese government. They do not worry about quarterly profits. They think in decades. They identified silver as critical to future technology and national power. Then they acted. They started with mining companies. Chinese firms bought stakes in silver mines across South America and Asia. Not majority stakes that would trigger regulatory scrutiny, just enough to secure long-term supply agreements. Those agreements guarantee that a large portion of my output goes directly to China before it ever hits the global market. American buyers never even get a chance to bid on it. Then they move to refineries. Silver comes out of the ground mixed with other metals. It needs processing. China built relationships with refineries and offered premium payments for guaranteed delivery. They paid above market rates. They provided financing. They made it impossible for refineries to say no. The result is that even silver mined outside China gets refined and shipped to Chinese facilities. Next came the exchanges. China quietly accumulated physical silver through commodity exchanges in London and New York. They took delivery. Most traders do not take delivery. They roll contracts forward or settle in cash. China did the opposite. They demanded the metal. They shipped it out. Month after month, year after year, the vaults emptied. Nobody stopped them because technically everything was legal. The system allowed it. China just used the rules better than everyone else. American investors kept buying paper silver through ETFs and futures. They watched the price and felt secure. The price stayed relatively stable. It even dropped at times. So people assumed supply was fine. What they did not see was the divergence. Physical silver was disappearing while paper contracts multiplied. The price of paper does not reflect reality when the physical market is being drained in a different direction. Wall Street had no incentive to warn anyone. Brokers make money on transactions. Fund managers collect fees on assets under management. As long as clients kept buying paper products, revenue kept flowing. Nobody asked the hard questions. How much physical silver actually backs these ETFs? Can you get delivery if you want it? What happens if everyone asks for metal at the same time? Those questions make clients nervous, so they were never asked. The United States government was asleep at the wheel. No strategic silver reserve was rebuilt. No policies were implemented to secure the domestic supply. Congress held hearings on everything except the things that actually matter. The Department of Defense identified silver as a critical material years ago. Nothing changed. The military still depends on foreign supply chains for a metal essential to weapon systems and communications technology. China was not alone in this. Russia accumulated silver too. India increased its reserves. Central banks in smaller nations started diversifying into physical metals. They all saw the same thing. The dollar-dominated financial system is fragile. Paper assets can be frozen, sanctioned, or devalued. Physical resources cannot. When you hold the metal, you hold real power. Now consider what this means for everyday Americans. You might think this only affects investors and manufacturers. You would be wrong. When critical materials become scarce, costs rise across the entire economy. The solar panel on your roof uses silver. The smartphone in your pocket uses silver. The car you drive, if it is electric or hybrid, uses silver. When supply tightens and prices spike, those costs get passed to consumers. Medical devices use silver for its antimicrobial properties. Water purification systems use it. Batteries use it. The technology that makes modern life possible depends on steady access to this metal. If that access gets restricted or becomes prohibitively expensive, innovation slows. Products become unaffordable. Industries collapse. American companies are already feeling the squeeze. Some manufacturers report longer wait times for silver shipments. Others are paying higher premiums. A few have started redesigning products to use less silver or find substitutes. But substitutes do not always work as well. Performance drops, reliability suffers, quality declines. The financial markets have not priced this in yet. Silver prices remain far below where they should be, given the supply situation. That gap represents a massive repricing event waiting to happen. When it does, fortunes will be made and lost in days. The endgame is already in motion. What happens next is not speculation. It is the logical outcome of choices already made. China controls physical silver. America holds paper promises. When the two collide, only one survives, and it will not be the paper. Here's the timeline Americans need to understand. Industries that depend on silver will face shortages first, not all at once, gradually. A manufacturer in Ohio cannot source enough silver for circuit boards. Production slows, orders get delayed, customers go elsewhere, jobs disappear. This is already happening in small pockets. Most people do not connect it to the bigger picture. They blame supply chain issues or pandemic after effects. The real cause goes deeper. As shortages spread, prices will rise. Not the paper price you see on financial websites, the physical price, the premium you pay to actually get metal in your hands. That premium is already growing. It used to be a few percent above spot price. Now it can be 10 or 15%. Soon it could be 50% or more. When paper and physical prices separate, the illusion breaks. People realize their investments are not what they thought. The psychological shift will be sudden. One day, the market operates normally. The next day, why, everyone wants physical delivery. Exchanges cannot provide it. ETFs suspend redemptions. Brokers offer cash settlements instead of metal. Lawsuits follow. Congressional hearings follow. But the damage is done. Trust in paper silver evaporates. And once trust is gone, it does not come back. China will not need to fire a shot. They will simply set terms. American companies that need silver for manufacturing will have to negotiate with Chinese suppliers. Those negotiations will not be fair. China will demand concessions, technology transfers, trade agreements, political cooperation. Companies will have a choice: accept the terms or shut down production. Most will accept. National sovereignty erodes one contract at a time. The defense implications are severe. Military systems that require silver will face supply constraints. Missile guidance systems, radar equipment, communications networks, satellite technology. All of it depends on components that use silver. When a foreign adversary controls the supply of materials your military needs, you are no longer independent. You are vulnerable. Decisions get made based on access to resources rather than national interest. Compare this to how America operated 50 years ago. We controlled oil markets. We controlled gold flows. We set the rules for international trade. Other nations had to play by our system. That dominance came from controlling real assets and strategic resources. We gave it up. We outsourced manufacturing. We sold reserves. We convinced ourselves that financial engineering could replace physical production. It cannot. Other nations learned from our mistakes. They watched America financialize everything. They saw Wall Street grow while factories closed. They noticed the debt piling up while the infrastructure crumbled. They decided not to follow that path. Instead, they focused on accumulating real things: commodities, metals, energy, food production capacity. They built resilience while America built derivatives markets. The silver situation is a microcosm of a larger problem. America has substituted financial claims for actual wealth. We print currency and buy goods from other countries. We issue bonds and call it prosperity. We create digital assets and pretend they have value. But none of it is real. Real wealth is land, factories, resources, productive capacity, the things you can touch and use and build with. China understands this. They stopped buying our debt and started buying our resources. What can change this trajectory? Not much at this point. The silver is already gone. Rebuilding strategic reserves would take years and require political will that does not exist. Restarting domestic mining faces environmental regulations and permitting delays. Even if America started today, China has a decade's head start. The gap is too wide. Individual Americans have limited options. You can buy physical silver yourself. But availability is already tight and premiums are high. You can invest in mining companies, but most silver comes as a byproduct of other mining operations. Pure silver miners are rare. You can hope the government wakes up and takes action. But hope is not a strategy. The bigger question is, what comes after silver? If China can corner one critical commodity, what stops them from doing it again with lithium, cobalt, or rare earth elements? The answer is nothing. The same playbook works for any resource America needs, but does not produce. The transfer of power continues until something forces it to stop. So here is what you need to ask yourself. If the money in your account cannot buy the things you need, what is it actually worth? Drop your answer in the comments. And if this opened your eyes to what is really happening, share this video with someone who needs to see it.